Hey, how's everybody doing? Listen, we're going to talk about credit. Now, I just finished a meeting with a client who filed bankruptcy about 4 or 5 years ago, about 2015, so 5 years ago. And they recently came into some money, so they purchased a house. So they paid cash for this house and they paid off all of their debts. And over the last 12 months or so, they have been on time. Everything's been going amazing. Their credit score is about 700. And so the only thing left was a car payment that they have. So they called me up and they said, hey, what do you think the best way is for us to handle getting rid of this car? We don't want any debt. We want to be debt free. We want to get rid of it. I said, well, the easiest thing for you to do is most likely, instead of spending your cash, whatever cash you have left, how about you go get an equity line? So get a line of credit against the house. It's called an equity line of credit. And it's usually revolving, meaning that you only pay on what you use. If you pay it down, then it goes back to a full line of credit, and then you can use it again. You pay that, you can use it. It's a very elastic tool that many wealthy people use in their financial life. The rate on the equity line is going to be much cheaper than most other loans or anything else that you can do. And you only have to pay on what you borrow. So it becomes very flexible. It becomes a very useful tool in your financial life. Long story short, they go out and they look to secure this equity line of credit, only to find out that because of the way the market has turned, they need a 720 credit score. When they go on their retail sites, the Experian, the Equifax, TransUnion, or Credit Karma, one of those resources, it shows that they have a 720 or better credit score. The problem is that when you go to an institution, a lending institution, they use a different FICO score when it comes to judging, in their opinion, if you're credit worthy enough to loan money to. And the bankruptcy in this particular case had pulled their FICO score down so much that it was under the lending limits. So the frustration is that when they look at their credit card statement, which they pay off every month, they don't carry any balances on them, it shows them with the FICO score of 720. So here's why I'm sharing this information with you, because credit is so confusing. It is such a cluster that you need to understand how the system works, and then how credit works, and then what you should be aiming for, shooting for in order to improve your situation. So here's the really quick version of how the system works. The three leading institutions, TransUnion, Equifax, and Experian, all have a separate formula that they use to calculate your credit. In addition to that separate formula, there's also a different formula depending on if you're getting a car loan or a home loan or an equity line loan. So you could, in essence, go and subscribe to a premium credit tracking service. I've done this. I've done it with a local bank. And you will get all three scores, and you can track your credit, make sure that no one's abusing you and those type of things. Subsequently, I've also had a different premium credit. So I've had two different premium credit tracking services. So I'm getting 6 scores. Let me tell you, none of the scores matched. The Equifax did not match the Equifax on one service to the other service, 2 different scores, even though it's the same company. The Experian and the TransUnion, I had 6 different scores. Understand that there is no public information. There is no public disclosure when it comes to these credit agencies as to how they calculate and formulate your credit score. So anytime that you want to go and get a score, you want to go and you want to use your credit to get a credit card or to buy a car or anything, understand clearly that most institutions will run all 3 companies. They will throw out the low score, they throw out the high score, and they will use the middle score. You nowadays really shouldn't try to buy anything unless you have a minimum 650 credit score. And if you're trying to get a home, it should be closer to 700. Now, when you go, don't be disappointed to find out that if you say, hey, my middle score is a 700, that they're going to agree with you. Again, they use a different formula. So what can you do? You need to be super aggressive about cleaning up your credit. You need to be super diligent about making sure that everything's on time, that you don't have a high debt to expense ratio on your credit cards. We can go over all this in finer detail. We've done a 3-day series on, 3-session series on credit that we can get you access to. But understand the basics, how it works, why you should be aware of this, and so that you're not frustrated and disappointed. So in this particular case that I identified earlier, what we recommended that individual do is they had a car that they wanted to pay off. They inherited the car, they inherited some money. So we suggested that they go to the bank, try to assume the loan on the car. And if they can't assume the loan on their car, their credit is good enough to get a car loan. Car loan rates are credit requirements are a lot less invasive, and get that loan, hold on to it until your score goes up. It'll probably take 4, 5, 6 months at the most. Understand that paying on a major purchase like an automobile is one of the fastest ways to increase your credit score, period. Better than anything else that you could really do, having that car loan will help increase that. So once you get the score that you're looking for, the score that you really want, you now have the ability to go back to the bank and apply for that equity line of credit. Then you can pay the car loan off at a better rate. You get to write off the interest on an equity line compared to an auto loan. And that will give you enough latitude to boost your score, give you enough time to be in a better position, but also accomplish your overall goal, which is to pay a lot less on the car and to have a lot more flexibility. If you have more questions about your credit and how you should be viewing it and how you should be working through this process for a business loan, for a home loan, an auto loan, or just securing basic credit, reach out to us. We are happy to help you maneuver through the minutia and the BS, because it is a scam. Credit's a scam, but you got to have it. So you better learn how to play the game.